Humour this morning. So my name is Christina Morrissey. So is there anyone who didn't join us yesterday or weren't at the breakfast this morning? No, so I'd have to go through all the pre-roll. That's fantastic. It's lovely to have you all back this morning, early birds that you are. So we've got a jam-packed program this morning going through to this afternoon at about 3 o'clock. And I'm looking forward to your company right the way through. We've got a wonderful morning tea, a fabulous lunch, and they're the times that you take that opportunity and go out into our exhibition hall and speak to our presenters and find out a little bit more. It's a chance for you to have some one-on-one, and that's what this conference is all about. You hear these things, some of you I know have travelled around the world going to conferences, and you pointed out to me that what you loved about a conference like this is the opportunity to actually come and speak to our presenters one-on-one. And for those of you who are watching us online this morning as well, a big welcome to you. It's lovely to have you wherever you may be placed around Australia and the world. And a reminder too that all of our presenters, I know that we're talking the one-on-one is really, really important, but you can get their phone number off the company websites, and they are more than welcome to have a chat with you as well about the company, so you can feel a bit more confident about investing your money. So without any further ado, it's 9 o'clock this morning. It's time to get underway. The rules of engagement stand. Ezra did say to me, when I give the 2-minute bell, like that, I'll give you a 2-minute warning. I'll stand up at 1 minute, and the 2 minutes, apparently I should be putting the fingers around the other way if you don't get off the stage quickly, but I'll remain decorous for today. So Joanne Bergerman has joined us, everyone, up on stage this morning. And Joanne is a communications director of QEM Ltd. So QEM's flagship Julia Creek project holds a very globally significant vanadium resource with the added potential to deliver innovative green energy solutions. So if you'd welcome Joanne to open our conference for day 2.
Thank you very much, Chrissy, and thank you very much for having me this morning. As you know, I work for QEM, and I would just like to quickly acknowledge the Woonamara people as the traditional owners of the lands on which QEM operates our project in Julia Creek. We pay our respects to ancestors and to their descendants who continue cultural and spiritual connections to country, and we recognise their valuable contributions to Australian and global society. So this slide holds the usual disclaimers regarding the usual things about forward-looking statements, and my task in the next 13.5 minutes is to sufficiently describe the drivers behind QEM's flagship Julia Creek project and lay out the investment case. Of course, if you're able to quickly scan this disclaimer, you'll know that this absolutely does not constitute investment advice and that you should conduct your own investigations. This is a bit of a hard clicker, isn't it? So, this is our board. So you can have the best resource in the world, but the overriding factor for a successful project that I found is a great leadership team. Every member of QEM's board has a proven track record in developing energy and mining projects. They're collaborative, they're results-driven, and importantly, highly invested in the company. Between the board, they own over 50% of the company, and most importantly, not a single member of the board, nor the employees, nor the owners' consulting team none of us have sold a single share since we were listed on the ASX. So QEM also successfully completed a very oversubscribed capital raise back in May. And as you know, the market's taken a good hit in recent weeks, and we're proud to say that QEM's held up remarkably well. So where are we? QEM is primarily a critical minerals and energy project in northwest Queensland. The project covers 4 exploration permits over 250 square kilometres, just 6 kilometres from the township of Julia Creek. The permits lie in a Tier 1 mining location within the Eastern Resource Development Corridor and within the Northwest Minerals Province, which is recognised as one of the world's richest mineral producing regions. And most importantly, it's highly prioritised for development by federal and state governments. As you can see on the map, QEM's tenements intersect the Flinders Highway and the rail line, making our project ideally located close to services and infrastructure with direct road and rail access to Mount Isa, which is only 250 kilometres to the west, and the Port of Townsville, 600 kilometres to the east. The yellow line on the map shows the Copper String 2 proposed network transmission line, which they've actually diverted to go through our tenements in response to our project requirements. So, as you know, we're developing a critical minerals project utilising innovative and sustainable energy solutions, and we believe the competitive advantage of QEM's production process is primarily due to the multi-commodity nature of the project. Our aim and our mission is to become a leading supplier of vanadium and transport fuels from our Julia Creek project. And currently we hold one of the single largest deposits in the world of vanadium, and vanadium was marked as a critical mineral by Australian, US and EU governments. And following a successful drilling campaign at the end of last year, we were able to announce in April an indicated JORC resource increase of 64% to 360 million tonnes. So that's in the indicated category, which brings our total vanadium JORC resource to nearly 3,000 million tonnes at an average V2O5 ore content of 0.31%. So we've got further exploration drilling happening next quarter, and we expect that resource upgrade to go again. So the ore body also comprises oil-bearing oil shales, containing a contingent resource of 79 million barrels in situ oil equivalent in the 2C category and nearly 700 million barrels in the 3C category. So all products will be produced on site in Julia Creek using innovative, low sulfur and low carbon emission technologies. Interestingly, the resource upgrade also identified a material volume of aluminium. So HPA is a high purity form of aluminium oxide. And in March this year, it was also designated as a critical mineral. So now we're looking at a multiple critical minerals project. So an average of 24,000 parts per million of aluminium were identified in the resource. So the project scope comprises a shallow open cut mine, mining processing facilities and infrastructure consistent with a major capital project. The project is currently advancing through a pre-feasibility phase with plans to enter definitive feasibility by 2023, following a well-defined stage development strategy designed to de-risk the project. QEM is considering renewable generation at varying scales up to 1 gig with the objective of powering not only the mining operations and minerals processing, but also green hydrogen production on site. So there'll be the added potential of exporting to the NEM via the proposed Copper 2 transmission line, which runs through our project. And this infrastructure project is just vital to the Northwest Minerals Province. So in March, QEM, with our environmental consulting partner, Epic Environmental, completed initial baseline surveys of the project area, including regional ecosystem surveys, habitat assessments, bird surveys, spotlighting surveys, and fauna trapping. And Epic is working through the environmental impact statement right now for the Julia Creek project. And they're also assisting us with major project status and coordinated project status applications. So they're the federal and state statuses that we're seeking and that we think that we're qualified to retain. So we've just been up in Julia Creek this week, and aerial drone surveys are happening as we speak to baseline the current environmental condition of QEM's tenements and to provide high resolution detail to the tenement area right down to the last weed. So that's how they can get in within 2 centimetres of what's on the ground. So on Monday, we went to the Julia Creek State School with the National Drones team to give a presentation to the kids who saw the QEM logo and immediately said, "Oh, you sponsor our local footy team." So they wear our jerseys. Nothing goes unnoticed in these regional areas, and we just love supporting the local community. So this is our project concept design. We're planning to establish within the Julia Creek project area an industrial precinct that will be producing vanadium pentoxide, hydrogen, and high-value transport fuel, which is so badly needed in that region, and a renewables precinct comprised of solar and wind farms. Basically, all will be mined. The oil will then be extracted and upgraded with green hydrogen produced on site, and this will leave a concentrated vanadium-rich feedstock at the surface, effectively free of mining costs. So the production targets for the Julia Creek project are 10,000 metric tonnes of high-purity vanadium pentoxide per year, 6,000 barrels or nearly 1 million litres per day of transport-grade fuel, up to 1 gigawatt of renewable electricity generation, and green hydrogen, primarily for on-site use, but with the capacity to expand to meet regional demand should the need exist. So a bit of a pilot plant update for you. Last month, QEM's vanadium and oil shale bench scale pilot plant was delivered, installed and formally commissioned. So it's a really exciting time for the team. The pilot plant is located in the Melbourne headquarters of HRL Technology, and the plant is scheduled to be operational for a period of up to about 6 months. So we've spent a considerable amount of time and money in the lab, and now it's time to prove out the company's proprietary extraction process ahead of a commercial demonstration plant. The full-scale advanced testing program is underway, and we expect to see initial results in the next few weeks. So the plant will also provide enough bulk material to feed into the state government-funded proposed Townsville multi-user vanadium processing facility. And this is a $10 million project backed by state government. QEM's a founding member of the Queensland Vanadium Consortium, and we were instrumental in getting the government across the line to create this vanadium processing facility to get the industry going ahead. I mean, there's a reason that vanadium is a critical mineral, because we desperately need it. So QEM's primary focus is the extraction of vanadium and oil shale, but the company will also integrate test work in investigating HPA extraction potential. So all of this will give us the platform to advance our PFS work. So a quick renewable power update for us as well. So GHD recently completed a renewable power study for QEM, modelling a number of hybrid solar and wind options, up to 1 gigawatt of generation. And Cloncurry-based company, which is just down the road from where we are in Julia Creek, the company Fulcrum 3D has completed fabrication of a 160-metre high meteorological mast for on-site wind and solar monitoring for the next 12 months. So digging commenced actually when we were out there on Monday, which is very exciting. And the concrete foundations are being poured as we speak. The SODA and solar units have been providing data since they were delivered on site about a month ago. And together with the data captured by the MetMast, this will provide us enough recorded data to complete the bankable feasibility study for the renewables project and support in ongoing discussions with CopperString regarding potential import-export into the NEM. So we're very committed to ESG at QEM. So our purpose statement and our ESG statement are one and the same. So we're a Queensland company developing a critical minerals project utilising innovative and sustainable energy solutions. And we think that sums up the whole company, our mission, who we are, what we're doing. At the end of last quarter, QEM engaged Social Suite to streamline, monitor, and then disclose our ESG progress and initiatives. So we're particularly active in our local communities, both here on the Gold Coast, where our board are based, and in Julia Creek. So landholders are kept really well informed via a weekly report that we send out to them and other key members of the local community. And they're really supportive of our project going ahead. We also meet regularly with the McKinley Shire Council, who are also very supportive of minerals-based projects getting up in the region. So you can see some of the other social, environmental and governance initiatives which we're already undertaking on this slide. So like many other small caps, we already had the ESG policies and procedures in place, but we just didn't know how best to disclose and highlight to the market what we were actually doing. So after much research, we actually chose Social Suite to assist us in implementing an ESG framework, which was developed by the World Economic Forum. So it was remarkably simple to create this baseline report, which we then released to market, and it was really well received by market. We had a nice jump this week, which I'd like to say was thanks to the ESG disclosure. Again, just what we were already doing. So at the end of this quarter, we'll be able to provide our first quarterly ESG comparison. So, instead of greenwashing from now and saying, oh, a year ago we started ESG, we can actually benchmark that and show our progress. So why is QEM a great investment proposition? The answer lies in the staged sustainable development of our multi-commodity resource base and utilising the on-site renewables to produce low-carbon transport fuel from oil, plus renewable energy storage battery minerals and green steel alloy. So QEM has a clear pathway to unlocking the Northwest Minerals Province vanadium resource. How does this meet the market? Well, the demand for vanadium is set to increase up to 400% by 2040. And there's also rapidly growing demand for vanadium to supply vanadium redox flow batteries. Australia holds the third largest resource vanadium in the world, about 18%, and we're not mining it yet in Australia, so it's time. In addition, Australia's dependency on transport fuel imports has grown from 60% in 2000 to over 93% today. So, you know, that added 30 billion to Australia's trade deficit just last year. In summary, our globally significant vanadium resource, overwhelming government support for critical minerals projects, especially in the regions, and our innovative solutions for the impending energy transition tell us that this is the right project at the right time. So please come and see QEM's Managing Director, Gavin Lloyd, and I at the booth now to discuss our flagship Julia Creek project. Thank you very much.
Well done. Great start to the morning. Thanks so much, Joanne. And thanks to the girls from St Hilda's as well. Can we all say hello to the team from St Hilda's? Young women down here who are interested in the mining industry. Great to have you here, team, too. Now, for those of you who've got your booklet in front of you, just a reminder too that any of the companies you see present today, they're listed in alphabetical order, and there is that QR code in there. So if you just hover your phone over the top of it, if you like what Joanne's company is doing, for example, hover over the top of there and it will take you straight to the website and you can find out more details. Now, our next presenter, girls, is another strong woman. Her name is Yaxi Zan. She's the MD of Accelerate Resources. Now, Accelerate is an Australian manganese producer who their goal is to become this next Australian manganese producer, supplying high-grade manganese, which is a key mineral in the steel and the EV industries. And it's due to Yaxi's determination, it's due to her skill that the Explorer is actually about to become a producer. It's a great story and it starts with her. So please make her very welcome this morning, everyone.
Thank you. Just take a step back. Imagine in 2004, a young Chinese student arrived in Australia with nothing but a suitcase and limited English. She would never imagine one day she will become a managing director and founder of ASX-listed mining companies and presenting in front of you. And in 2012, she quit a well-paid job, stable, and then giving herself a glorified title of a CEO of a mining startup company based in Kalgoorlie, Gemstone Mining. She would never imagine that in 4 years' time, she will bring that operation into production, shipped, mined, and sold directly to China, 2 million tons of gemstone in 2016. And in 2019, her new venture, Accelerate Resource, in the middle of the pandemic, almost on its knees, with limited resource, no funding, no team, no project. And she would never imagine that today, the company is in its pathway and on its pathway to become the next producer of high-grade manganese within the Woody Pilbara area. So I'm glad to be here today with Adrian, our project manager, to bring to you an exciting new project, which is the Woody North high-grade manganese project, and share our exciting journey ahead. So right now, we are experiencing rapid growth in the EV car industry. In 2019, 2.2 million EV were sold, representing only 2.5% of the global car market. And then in 2021, the EV sales more than doubled to 6.6 million. And today we're standing here with almost the 10 million EV on road and projected the growth to about 200 million EV on road by 2030. So with the growing demand, the supply chain securities underpin the future growth of the sector. At Accelerate Resource, our vision is to become the next manganese producer to meet the increasing demand from the battery and the steel industry to provide low-cost, high-grade, and sustainable supply of manganese for both the steel and EV battery space. So what is manganese? So manganese is a common but critical metal. 90% of the manganese is used in the steel making industry. It makes the steel not so brittle. So it's widely used the stainless steel and aluminum alloy steels. So in the steel industry, there's no replaceable minerals for manganese. It is also a critical mineral for EV batteries And since 2019, both Tesla and Volkswagen has already announced their forward planning to bring the next generation with high manganese content into the production line. So the current preferred battery compositions are nickel, cobalt, and manganese batteries. So in here, manganese acts as a stabilizer in the mix, play an important role to ensure the safety of the battery cells for both EV cars and the EV devices. So this drives the manganese consumption in the battery sector to about close to 18 times fold by 2050, with the increasing demand for the manganese supply to the sector. So we Accelerate Resource is well positioned in the upward trend of the commodity cycle to develop the Woody North high-grade manganese project. So now take a look of the project itself. So location-wise, the project is well located. It's close to all the major infrastructures. It have access to the road, rail, and also only 10 kilometers away to a national gas pipeline, which is currently have a spare capacity. This is also 150 kilometers to Maboba and 240 kilometers to Port Helen, which is the major bulk commodity port. So this Port Helen actually started with shipping the manganese mine back in 1950s before it became really famous for iron ore shipping port. So the second highlight of this project is its geological features. The project is located in the Woody Pilbara high-grade manganese province with a close to 240 square kilometers prospective ground with 35 kilometers of continuous mineralization trend, 70 kilometers north of Woody mines operations. So here we have to take a little bit of break and have a look what is Woody mine. Woody mine is a world-class manganese mineral field. It's well known for its premium manganese product and mining high-grade manganese content, high manganese to iron ratio, and low impurities. Woody mine was first in production in 1950s and currently is held by Consolidated Minerals with parent company based in China. This is a vertical integrated mining operation. The mine operation has about annual production around 1 million ton, and the processing for the facility on site is around 1.6 million ton. So our Woody North project is along the trend and share the similar geology and the geophysics signature as Woody. The project comprises 2 separate but continuous blocks, which is namely Barra Mine Project and Braeside West. So first, let's have a look Barra Mine. So Barra Mine project was last explored by Shaw River back in 2012, with total of a $7.2 million spent on ground. And the expenditure is mainly on drilling. RC drilling is close to 27,000 meters, and more than 2,000 rock chip samples and more than 5,000 soil sample has been collected in the areas. Here shows some historical high-grade drilling results, up to 46%, and the thick intersections 11 meters and 28%, 15 meters and 24%, and 18 meters and 21%. The historical metallurgical test result is also indicate a high-grade premium product up to 48% can be delivered from this deposit. So there is a liberation through the DMS beneficiations. And here on the slide is showing the end product. So in the last cycle, due to the low commodity price towards the end of 2012, the project became unviable and forgotten for the past 10 years. So we just had a look the drilling result, and with a large amount of historical data in hand, we're ready to fast track our project by starting a 4,000 meter drilling program campaign in the coming weeks. These drilling targets are identified using the Woody style mineralization model. As shown on the right, this is a simplified geological model. The gray indicates the hot fluid comes from the deep within the Earth's crust, traveling up along the structure of the fault line, and the hot fluid will travel through the manganese-rich dolomite host rocks. And when the pH level changes, it concentrates and remobilizes the manganese from the surrounding host rock forming the manganese deposit. So it's quite simple. And on the left is a cross-section view of our Area 3, and based on the historical drilling data. As you can see that it is identical to woody style mineralization model, and dates back to the fact, with thick high-grade intersections mineralization from surface. So for the Braeside West project, this again exhibits all the characters of woody style mineral manganese deposit style. Braeside West is a significant underexplored area with historical drilling include 11 meters, 28%, 2 meters of 41%, and 8 meters of 37%. And early this year, we have completed a detailed analysis, analytical work, and structure interpretation. We have identified a further 195 cluster areas of surface manganese and 30 priority prospective areas. So this project, no shortage of drilling and exploring targets. So coming up in the next 6 months will be a really busy period for Accelerate. So what's coming up? After the consolidations and preparations, we will start 4,000 meters of RC drilling program to test 8 of the 30 priority targets. And I will also plan to start the second round of follow-up drilling towards end of 2022. Parallel towards, importantly, is continue with metallurgical test work based on the historical success. And that will help us to map out the product pathway forward. To meet the EV demand, we will conduct a hydrometallurgical test, and this will be commissioned towards September quarter. So by end of the year, we are aiming to deliver the very first maiden JORC resource for the project area for the first time. Without the team, we won't be able to complete any of the tasks. And we have a very strong and balanced, experienced team, strongly supported by our shareholders and stakeholders. And we have delivered a company transformation consolidation plan, and we will continue to execute on the growth strategy as per outlined. So in summary, why invest in Accelerate? Invest in Accelerate represent a high growth EV space and invest in high quality project and the team, and invest at the right time. So please come to this our booth number 48. So talk to me and Adrian if I have any further questions. Thank you.
Thank you so much. Thank you for that. It caught me on the hop there. Yeah, it's a good story though, isn't it? It's a great story and fantastic determination. Thank you so much for sharing it. It'll be interesting to see if you intend to follow that journey. Bradley sitting there, considering it seriously. Right. Tom Redcliffe, up the back. Where are you sitting, Tom? He's coming up the back. He goes racing down to Meadows. Now, GreenTech Metals is the next company to present at our Gold Coast Investment Showcase. They're an exploration and development company established to discover, develop and acquire resource projects to supply the growing demand from global goodness me, I didn't even go out last night. Electrification is the process there. So to tell us what's been going on, and it sounds like there's been a lot going on for you in the last few weeks, Tom Redcliffe. This is GreenTech Metals Ltd. Tom Redcliffe. Please make him very welcome, everyone.
Good morning, everybody. It's good to be here. Today I'm going to talk about GreenTech Metals. We were the first company to list on ASX this year on the 4th of January, and having raised a relatively modest these days, $5 million. And we started work drilling, in fact, within 2 weeks, and have now completed about 5,000 meters of RC. So the company listed because we were able to secure non-core nickel copper assets in the Pilbara region from the Artemis Resources and another private equity group. Okay, so the investment proposition, we've got high quality assets in the electrification area. Okay, and we've got straight into business. Starting drilling. The high experienced board management and a reputable technical team, consultants. We have flagship assets at Wandoo Asia, which are open pittable, close to established processing facilities, granted EMLs, existing JORC resources with substantial exploration upside, and with potential that we think to fast track to production. So in the past 6 months, we've added 50% to the metal content total copper zinc metal that we have there in those projects, without actually including any of the new results that we've got from drilling. So there's a snapshot of the company today. It's been, as you can see on the thing, and there's been a little bit of flurry of activity on the market in the recent weeks when we released results, or partial results anyway, from our drilling in the past 6 months. Like every other company, we've suffered from the delays getting results through the laboratories because they are completely overwhelmed. And we only have about 2/3 of our results to date. So we have 45.5 million shares on issue. Market cap, last time we looked anyway, the last few days, was $11 million. Up until the last week, we were trading roughly around just under the 200,000 shares per day. And one of the, I suppose, important aspects is the major shareholders, which is Artemis at nearly 15%, and the private groups another 14% as well. So collectively, almost 30% of a solid block of shares held as a cornerstone block. And top 20 shareholders hold almost, well, 53% anyway. Yeah. So why did we do it? Well, the electrification business these days, if we all have to hop into electric cars in the near future, we're going to need these metals: copper, nickel, zinc, cobalt, etc. And the short-term forecast for these metals, the demand, is that they're going to increase quite significantly over the next decade. 31% for copper, nickel up another 50%, and zinc going up 30-odd% as well. So the fundamentals for these metals, at least for copper and nickel, is good. Okay, with both prices projected to increase, obviously, along with demand in the near term. So we think we're well placed in this respect in these commodities. So just quickly then on to what are our projects, just a overview. We have a focus in the West Pilbara, and that's a shot of the recent drilling there. Some of the chalcopyrite coming out of some of the holes. Okay, we do have other projects down at Fraser Range, also nickel focus, another place called Windermurra. But our first, I guess our flagship projects are in the West Pilbara. So what's the attraction of this, the West Pilbara? Well, just quickly on the geological side, all the highlighted green colours there, they're mafic intrusions. They're very fertile in this area, both for nickel copper intrusive deposits, and particularly below that shear line that runs through the map from west east is a shear zone which divides it geologically, but to the south there's also intrusions, and there we get there's also felsic intrusions, and that's where we're finding these VMS deposits, copper zinc. Okay, but the numerous different mafic intrusions to the south, you can see there you've got PGEs at Money. Elizabeth Hill is the, I'm led to believe, is probably the richest silver mine in Australia, held by Alien Metals. who are looking at dewatering it as we speak. And there's just, it goes thousands of ounces to the ton silver previously mined. Just to the north there, Radio Hill is a plant, nickel processing plant owned by Artemis Resources, currently on care and maintenance. Operated as recently as about 2018, or had an upgrade in 2018. And it is capable of being modified to take copper and so forth. Over to the east, Wim Creek, Annex Resources have they've trying to move towards development as well. They got about 6 million tonne, I think, in their most recent announcement. It's a copper zinc, very similar, identical almost in many ways to Wandoo. It's a copper zinc VMS deposit, and they're set up there with flotation cells, etc. And in fact, historically, some of the material that was mined from Wandoo back in 2006, some of it went to Wim Creek to go through their heap leach process. So there's a lot of activity up there, and the one I didn't mention there above the purple line there, Andover, nickel, copper, cobalt, that's where Azure Minerals are. Some of you may have heard of those guys. They're doing resource drill out there as well, and in their mafic intrusive host of nickel, copper, cobalt deposits. And that particular intrusion there is, runs all the way down here, and you can see there's other nickel deposits down in here as well. So quite a fertile little thing. So that's the geological story. But from a operational point of view, of course, you've got Karratha there, airport, 2 hours flight from Perth, multiple flights to and from Perth each day. All thanks, of course, to the iron ore operations, which are shipping ore out of Karratha and further up the coast out of Port Hedland and 1 or 2 other ports as well. Great logistic support there. It's well serviced. It's a good place to operate. And these deposits and so forth around here, Wandoo, it's only 40 kilometres out of Karratha. So you don't have to set up camps or anything like that. That's the Wandoo open pit. Okay, you can see here we've got the resources, 3.6 million tonne in the Wandoo group at 1.2% copper, 1.4 zinc. Ruthwell is about 250,000 tonnes of copper nickel there at 0.5% nickel. And our other important project is Osborne, which is this particular one here. But we go into slightly more detail with these now. If we just look at Wandoo first up. Now Wandoo is a very large mineralising system. It goes from here at where the Wandoo pits are. Here they are in better detail with some of the drill holes we've recently put in. And from there up to what's called Asia. Okay, there's another resource there that we've recently announced, and that's 1,500 metres, 1.5 kilometres, okay, through here. And there's other targets there as well. This one is Yannery. Oddly enough, it's had historic workings on it, some limited pits and or shafts, sorry, and adits and so forth where the oxidised ore was mined. These ones here obviously got open pits on them, and Wim Creek Consolidated took ore out of there, and the Fox Resources mined this in this particular hole here over about an 18-month period in 2006. Both cases, they were just taking the oxide, near surface oxide ores, and because there was no capacity at the time to deal with the sulfide ores. and the high grades in the supergene, and that were quite attractive at the time. Yannery, we've spoken about Yannery, but the Asia, close to 1 million tonnes there, but never looked at previously, was never mined or prospected. Shelby is an interesting target that we'll get to in a minute, and it's quite deep geophysically, because all these bodies show up on the airborne EM surveys, electromagnetic surveys that have been flown. This target in here is considered as big as Wandoo, but quite deep. So we just move on to here. This is how they hold together, or what we think it all means, and that it's been a multiple intruded system. And the dotted line is the base of what we call the felsic volcanics. These VMS deposits, which come out in the seafloor, are associated with that unit towards its base. Underneath are mafic volcanics, which is the footwall of the deposits. Surface workings here. Asia has an outcrop. 2 minutes, okay. Right, okay. I've been talking too much, I better move on. So we just go quickly through that. That's the Wandoo. Okay, from our recent drilling, we started here. Those couple of holes, the reason there's two is they both failed to penetrate the ore body. This is into the known resource, and we were trying to drill where another historic hole had failed to reach depth as well. Interesting intersections there, 62 metres, 1% copper, and some high grades there, 4 metres at 4.5%. No, the second hole had 42 metres, 1% copper, so quite repeatable. The zone in the outline there is a low-grade mineralised system. The centre part has gold associated with it, which goes with the copper mineralisation. And what we were looking for was extension, so we extended out off the edge of the known body and to look for these, because there was some evidence that there were multiple bodies in there, and we starting to see the evidence of it. The results from this hole here, we don't have them yet. There is a resource which we mentioned previously. This is Asia, again, an important one. I'll just mention a couple of holes here. At surface, small gossan, totally misrepresents the body underneath. This hole, 23 metres at 3% copper. Others up there is, you'll be able to see, there's 34 metres here at 4% zinc. They're quite big. And this is the intrusion here. We'll be drilling. We're setting up to drill as we speak, or peering pads at Osborne down in here. Nice EM target, never been drilled. Okay, as quickly, that's Ruthwell. And we've got a big program ahead of us coming through this year, more geophysics, downhole EM, more drilling, etc., to take us through to the end of the year. And that's the catalyst for investors. Increases resources, good targets, and getting on with business. And that's the important bit there, our disclosures at the end there. Thank you very much.
Tom, thank you very much. He's a man with 40 years experience as a geologist. He's very, very passionate about what he does. So please go and have a chat with him, because I know he'd like to take that conversation further with you one-on-one. We're going to change gears now. We're going from the resources industry to real estate. So online real estate platform Openn Negotiation Ltd. It's making the process of buying and selling property more transparent. It's facilitated over $5 billion in property sales. The company has a proven market fit. It's poised for a North American expansion within this calendar year, following the recent signing of several major pilot agreements. This fellow is their managing director. His name is Pete Gibbons. He is known as Mr. Nice Guy, Mr. Ethical. He's a very believable bloke. I've actually had dealings with this guy for more than 20 years, and pretty much everything he's done has pretty much turned to gold. So not that that influence you, but he is a pretty good guy. Today he's going to share an expert insight into Openn's growth trajectory and also their investment opportunities, and if it's something that you would like to look at for your investment portfolio. Please make him very welcome.
Thank you very much, everyone, and great for you to come along this morning. A special thanks to you, Chrissy. It's great to see a friendly face up here. I appreciate it. Let me tell you about Openn. We'll put our disclaimers at the beginning. I will loosely follow these slides. They've been uploaded onto the ASX this morning, so feel free to go and have a look there. But really, I think what you need to understand about today is what is it, why did we create it, and where is the opportunity? And not only is that opportunity here, but I'm pretty excited to talk about North America, which is a big story that we haven't really gotten out into the market, having been locked down in Perth for the last couple of years. So what did we create? My founding partners are real estate agents. I sat down with them about 6 years ago and said, what is your biggest problem in real estate? And they said, it's the lack of transparency. I said, okay, great. What does that mean? You'll all probably nod if you've all bought real estate. What it means is when you say to the agent, I like the property, I'd like to buy it, how much do I need to pay? Well, I can't tell you that, but I do have 3 offers over here. So put in your best guess and I'll let you know if you've got it or not. Immediately creates distrust and ends up in one of 2 positions. It's either, congratulations, you bought the property and you're thinking, oh, great, how much have I overpaid here? Or, I'm sorry, you missed out, it went for $800,000. And say, well, I would have paid that or I would have paid more. So the seller's left money on the table. It just doesn't work, that lack of transparency, compared to any other market that does have transparency. So that was 6 years ago, about $17 million raised and invested in technology. We came up with the platform that fixes this problem around transparency. It also creates and captures exceptional data that's never been seen before relating to a property transaction. And it just makes the process for an agent a whole lot easier to run. What does it look like? So this is an actual example. If you download, either go to openn.com.au or download the app Openn from the App Store or Android, you'll see what it's capturing is every single bidder. So when the agent says, I've got 3 bidders over here or 3 buyers over here, you know they're real because they've gone in, they've signed legally binding contracts and they're part of the process. You can see what you need to offer to secure the property. It's not the agent saying you're going to have to pay more. As you can see through the process, the data it's capturing, that depth of market data support for any pricing is exceptional. And that's generating a lot of interest from, as you can imagine, banks, insurance companies, etc. Because we're hoping with that data, upon statistical significance, we can start looking at lead indicators in the market. So where's the market going based on this depth of market information? But for you as the consumer, what it means is you'll pay fair market value for a property instead of being left wondering, have I overpaid or why did I miss out? We listed, we're not quite a year old yet, listed in July last year, and we set out our goals at that time around increasing our market share, leveraging partnerships. We wanted to enhance the technology and we wanted international expansion. The third one I'll speak to quickly and then I've got slides on the others, but enhancing the technology, we came up with a great solution. Then we had agents saying, we love it, but some properties we run in our traditional offer and acceptance. Can you do something that helps us there? So we said, yes, absolutely. Created Open Offers, which manages seamlessly multiple offers, lets them run their process far more easily. We had rural agents saying, we traditionally run tenders. Could you give us a tender process? So we created Open Tenders, which is working extremely well. So really we've become a go-to shop for the real estate industry to create the products that they want and create that transparency. I mentioned one of our goals, or our first goal, was getting traction. So we've already in Australia and New Zealand rolled out across Australia, started in Perth, now into New Zealand. Those numbers sort of give you an idea from where we were 12 months ago to where we are today. And it's quite phenomenal. As I say, please, I'd invite you to go and download from the ASX these slides. But if you think of it logically, the amount of people we had, the 62,000 registered users this time last year to 105,000 this now. And probably the key one for me here is it took us 5 years to get to $2.36 billion worth of property sold. And then in the last 12 months, we're to 5.12 billion. So we're really taking off here. As I say, not quite 12 months old, very tightly held. We put together a board of, and that's the great thing about being a new listing, you put together the board you want, your dream team. We've done that. We're trading it at around 17 cents at the moment. We, of course, think there's enormous upside to that. Again, as they're very tightly held, about 67% of the shares are held by the top 20 shareholders, including the founders who are escrowed. So we're hanging around and we love the story. Partnerships was one of our other keys. Most of the major groups, agents from pretty much all the major groups are using Openn. We've got national partnerships with the likes of Remax, Professionals, First National. We've got groups like CoreLogic who are now partnering with us on the data side. And probably the key one here that segues into the big story for us, which is North America, is the Reach accelerators. I'll quickly just explain that the National Association of Realtors is the largest real estate institute in the world. It's the American Institute, about 1.5 million members. They've got the world's largest prop tech fund, and they've created accelerators around the world for the technology they identify as being best of class in the world. They invested in us through their prop tech fund and put us into their Australian accelerator in 2021. Then last year, then they came to us 12 months later and said, we want you in our Canadian accelerator and we want to reinvest in you. We weren't quite sure why. And then it started becoming clear. They are seeing us as the best technology in this space in the world, and the opportunity in North America has been huge. So with that segue into North America, and I'm saying North America because we've got a huge Canadian pilot underway at the moment. But there's over 500,000 properties transacted in Canada and over 6 million in the US. There's about 150,000 real estate agents in Canada, over 1.5 million in the US. And you compare that to Australia, we've got 35,000 agents. So you can see where that demand for us is potentially coming from. And the fact we're getting invited into North America, it had always been on our roadmap. But what's happening in Canada, the government have come out and said, we're bringing in a Bill of Rights to stop blind bidding, which is exactly what I was talking about, the problem that Openn has solved. So we're running a pilot at the moment with the Canadian Real Estate, I'll jump to that one, the Canadian Real Estate Association, which all their agents are members of. And in that pilot, they own realtor.ca, which if you think of realestate.com or domain, it's that combined. It gets about 1.9 billion eyeballs a year. And as part of our pilot with them, we're integrating into that platform to provide this transparency to the Canadian market. So with them banning blind bidding has created an enormous opportunity for Openn. There were just a couple of other things I'll quickly touch on there. Transparency we've covered off. That's one of the reasons they want us in North America. Equality, we didn't even realise. So we're agnostic. We don't see race, creed, colour, we're technology. But in North America, if you're from a minority group, in certain circumstances, you don't even know if your offer's been put forward. Whereas with Openn, we solve all of that. So it's seen as a real plus. Efficiency, they write out spreadsheets now they might get one offer in the mail, one sent to their office, one at home, and they're trying to compare them all. All the offers come in seamlessly through our platform. They get a dashboard, compare and contrast, makes the agent's life so much easier. And the data I touched on earlier. I won't read that out for you, but CRE, the Canadian Real Estate Association, which has all the agents as members, very excited about integrating with us because they see that we're solving these problems for them. Our pilot with them has commenced, and the takeaway probably from this slide is around, as I say, it has commenced. We'll be looking to be actually doing live transactions this year in Canada and going to commercialisation by the end of the year. So it's moving very quickly. It's moving faster than we'd anticipated. We're building out very quickly in North America and the signs are extremely positive. I've focused there on Canada. We're signing, we've already got 2 pilots. In fact, we announced a 3rd yesterday with the MLS, which is the multiple listing service, the central repository for all agents in Florida, which has 41,000 agents. We just announced a pilot with them yesterday. So we're literally piloting across the country because people are identifying Openn as the way of meeting those 4 criteria that I alluded to earlier. Probably the most important thing, how do we make money? In Australia, we charge a fee for uploading onto the platform that's paid by the seller. Given the amount of agents in the US and given the, I guess, the fact that if we can create a revenue stream that is ongoing, a SaaS type model, that's the holy grail. And all the feedback from the MLS groups and our pilot partners is SaaS models is what the agents want. So in the US currently, agents are paying about $2,000 to $5,000 a year for technology that helps them do their job. So we would be in the order of $30 to $50 a month to use Openn unlimited. And as I say, you've only then got to do the numbers on the 1.5 million agents in the United States, the 150,000 agents in Canada, and that's just touching on North America. We get approaches literally from all around the world. People saying, look, we've Googled technologies throughout the world. You guys are the guys solving this problem that is a worldwide problem. We're very clear we need to remain focused. Australia has been a great testing for us and will continue to have a great focus to grow on. But North America is our next big beachhead. It's going extremely well. We think that's what's going to drive share price over the next sort of 6 to 12 months. I think if you want to judge our success in North America, be looking for more pilot programs, as we've already announced. They're guaranteeing that we're actually getting traction in the market. And then as we move those pilot agreements into commercialization agreements, they will be real indicators that Openn is really making traction and becoming a worldwide leading real estate technology. So thank you, everyone. Thank you, Chrissy. I think that covers what I need to say. Thank you.
Did anyone have any questions for Peter at all? Any questions anyone would like to put through to him? Hold on, Ezra. Hold on, I've got my running shoes on today. Ezra, I've got normal ones.
I'm Ben Ezra.
Ezra.
How are you going to overcome the Australian problem with the expression of interest?
Australian problem of?
How are you going to overcome the Australian problem where agents put expression of interest?
So they could either use open offers, which they do. They will put in a price indicator there, which is like an expression of interest, or they simply won't use the platform if they want to do it. Expression of interest, we could well create another profit, open expressions of interest. It seems to be covered by open offers, but again, we accept the feedback from the agents. They're not asking for it. If they ask for it, we'll create it. The technology has been built. The technology base is exceptionally strong. Our chief architect is a 20-year Boston MIT graduate, Guru, who's built the undercarriage of it. So it's not hard for us to then add whatever technology we need on top of that.
Ezra, thanks. We've got one last question here from John.
Thanks. It was a great presentation.
Thanks, John.
Just had one question. What's your barrier to entry? Where will your competitors come from?
Interestingly, in North America, and it really surprised us, there's no one really doing what we're doing. In North America, we fall under what they call offer management. So managing the offers that are coming in, they're not off, the platforms that are starting in that space don't have the transparency piece that we need, the equality piece, etc. So people will come. Obviously, we have a significant first mover advantage in that space, but eventually we'll see others entering the space. I think it is classic, very good technology, first mover advantage. And then you can see by the quality of the partners that we're partnering with at the moment, we are of the view, get big quick. And that's exactly what we're doing.
Pete, thank you so much.
Thanks, Chris.
Thanks. Thank Peter Gibbons, please, everyone. Right, we're changing gear again. We're back into our oil resources. We're digging things up. We're creating energy. Stonehorse Energy is an oil and gas exploration and production company with working interests in producing oil and gas wells in the USA and also in Australia. The company's strategy is to invest at the well level in development production wells with a higher probability of success. This is Executive Director David DeLoeb, and he's here to present the Stonehorse story today. Would you please make him very welcome, everyone?
Thank you, Chrissy, and good morning, everyone. Given the time constraints that we all have, I thought I'd sort of introduce the company by way of answering 4 pretty simple questions, and I'll start with really who we are. It's who, what, how, and why are the questions I'm going to try and cover in this. So who are we? We're, I guess like you guys, we're first and foremost an investment company. We invest in producing oil and gas assets, both on the east coast of Australia and in North America. We have 2 locations that we focus on in North America. Oklahoma is where the majority of our portfolio is currently located, and we're planning to invest in 2 new wells in the southwest of Louisiana in the oil sands. So I'll cover those new investments when I get to the how we do things. We're ASX listed. We've been listed for about 2.5 years. I think we're coming up to our 3-year anniversary in September. We're very much in a growth phase at the moment. So the strategy that our shareholders have signed off on and expect us to work toward is to sort of grow a portfolio of these working interests to ultimately deliver a fairly long set of annuity cash flows that we can at some point return to our long-suffering shareholders in the form of dividends or perhaps a share buyback. So a little bit unusual for such a small company, but that's our medium-term goal. We've probably got about 18 or so months still of growing that portfolio before we can get to that stage, but we're well on our way to doing it, and we think our strategy, if we stick to that strategy, that's the way to achieve that. I think if you just look at our sort of corporate summary, I'm sure every company that stands up here is sort of suggesting that they're undervalued, and we are no exception. We are a cash flow focused company, and we're cash accretive, and we currently have around about, actually that $8 million number there is probably a little bit old. We're probably closer to $9 million in the bank. And then when you add the PV value of the cash flows that our existing portfolio are throwing off, we're probably trading at about net cash. So, we think we're a reasonably attractive investment opportunity. Probably the other thing worth noting there is that our shareholder mix is probably not unusual for most companies of our size. We have a reasonable amount of high net worth investors, which include self-managed retirees, and we're also pretty proud to be able to say that we have a fairly significant interest ourselves at the board and management level, which I think a lot of our investors are quite happy to see. We're certainly trying to align ourselves and align the technical groups that we use in both in Queensland and in the 2 states in North America to sort of to basically ensure that we deliver some success. It's also probably important to talk about what we are not, and we are referred to and lumped into this group of companies called E&P companies, which are exploration and production companies, but we don't really believe we're an exploration company. We're not in the business of trying to identify and develop new fields, and we don't go out wildcatting wells, which we think is a very risky exercise, and we don't believe we have the balance sheet and the capital capacity to do that. So we're focused on really the execution is kind of where we see risk in our business, and so we're very focused on ensuring that those technical teams that are that we rely on in country are very experienced. They have long history in the area, and they are also aligned by the way that they achieve a return for their efforts and investment. They normally take small working interest in the wells themselves, and they really don't earn anything from us until such time as the well is completed and producing, and then we get all our investment capital back, and then they sort of back into some of the working interest that we hold. A very common structure in the US. It's not something that we invented, but we really like it. It keeps our operational overheads very low, and it really incentivizes those groups to identify and deliver projects that have a high chance of success. We are also, we're sort of not, people talk in this industry about being operators or non-operators. And whilst on some of these wells that we have working interests in, we have sufficient percentage of those interests that allow our technical teams to be operators on the well. But there's also some of these wells that we are invested in where larger American oil and gas companies operate the wells, and we're simply a passive investor. You can see on this table here that there's 10 wells there. The majority of these are located in Oklahoma. There's one in Texas, and as I suggested earlier, we're looking at growing our exposure down in Louisiana. We have probably just worth mentioning, we have a small investment in the Surat Basin in southeast Queensland. It's about 350 miles directly west of Brisbane. We've partnered with Armour Energy there. It's a workover gas well. It's an existing gas well, and we've been doing some work in basically remediating that well and trying to optimize it through some additional steps in that particular well. We continue to look at opportunities that are presented to us by Armour and others. We've looked in the Cooper Basin, and we've even looked up in the Northern Territory, but really our attention is primarily focused on, that was more of a discovery exercise for us. It's primarily focused in North America. We like North America because it has a very long history in onshore oil and gas, both conventional and unconventional. And when I mean unconventional, we're talking about frac stimulation, very common approach to drilling, onshore tight rock wells, shale wells over there. And they have a very friendly regulatory regime. And most importantly, and a significant difference in North America compared to Australia is that the landholder owns the mineral rights. So, they're very receptive to having companies come in and drill oil and gas wells, because they generally enjoy about a 20% royalty off each of those wells. So when you look at some of the production numbers that some of the big horizontal wells deliver, you can imagine that they're very keen to have us involved on their property. So why do we do it? Well, we do it because it's profitable, and we do it because our shareholders expect us to do it, and we do it because we like the conservative, de-risked approach that we take to identifying and putting capital deploying capital into these investment opportunities. You can see by that slide, that table we had there, we generally take working interest somewhere between 10 and 50% of the available well, and so we try and take a portfolio approach to managing that risk. We don't like to take too big a swing on any one well, and we certainly have flexibility that allows us to sort of manage our balance sheet. So if we have plenty of money to deploy, then we might take, and we like the opportunity, we might take we might go to the larger end of that range. I said earlier that we invest in both existing and new drill wells. We do have a a number of those wells on that, in our portfolio that are workover wells, very similar to the well we are involved in the Surat Basin. But the two, the sort of growth opportunities, I guess, are really focused on new drill wells in Oklahoma and Louisiana. We take direct investments in these wells, so we don't go through an intermediary. We like to deal directly with the guys that are, if not operating the well, then they certainly involved in the management of the drilling and completion of these assets. We have a very conservative approach to capital management. We don't have any debt on our balance sheet, and we really are focused on managing our cash position so we can just roll that free cash flow that we get off these wells back into growing that portfolio. We do retain exposure to commodity prices. We don't hedge our oil and gas exposure. It's something that our register likes to see. And we don't have any contracted sales, so we sell into the terminal market over there. So we are very much exposed to the volatility associated with West Texas Intermediate and Henry Hub gas. Our currency exposure really has a natural hedge in the fact that we are earning revenue in US dollars and we're redeploying those US dollars in country. So unless we have a requirement or a desire to repatriate currency, then we don't really see a lot of volatility to our financial performance through movements in currency at this point in time. Why do we do it? Well, I don't think it's too controversial to say that oil and gas and other hydrocarbon and fossil-based fuels are going to be around for a fairly long time to come. I acknowledge that there's certainly some strong growth that we're seeing in the renewable sector, but I think, and I think this side of the country is experiencing it at the moment, that there's certainly a fairly important place for fossil fuels that can basically deliver baseload power. And the other really interesting point, and you can see it on this slide here, is that yes, while the percentage of the sort of fossil fuels takes a greater percentage of the pie over a period of time, and this is from 2018 to 2050, you can see that the pie is actually growing. So the demand for energy is continuing to grow. So those percentages for oil and gas, are relatively stable over the next sort of 25 years or so. This comes out of the US Energy Information Administration, which is sort of a well-regarded entity over in that country. Another reason we're sort of happy to continue doing what we're doing is obviously we've had, for various reasons, both on the supply and the demand side, we've had a fairly significant increase in the value of hydrocarbon. You've seen West Texas Intermediate, or Brent, probably increased twofold over the last 18 months. And just as importantly for us, natural gas has actually had a larger increase. It's had a threefold increase, and it's worth remembering that these wells, all of these wells, produce both oil and gas. The gas oil cut range generally sort of swings between 70 to 30% either way. So we do have some wells on our portfolio that are producing 70% gas, 30% oil, and conversely, we have other wells that are producing more oil and gas. Depending on the price at the time, we'd either like to refer to ourselves as an oil company, and if the gas prices are high, we like to call ourselves a gas company. So how do we do it? Well, very quickly, there's a few slides here just worth looking at. This is a slide showing the coverage of wells in North America. The image on the right is actually our dual well, which is a high impact well for us. All of that material, machinery on the main part of that pad is removed after the the drilling and completion is finished, and you're left with a battery tank on the right there and a wellhead in the middle of that pad. So fairly low impact on property. That is a farm. That is I think that's a cattle farm in Oklahoma. I'm running out of time. So again, I think, you know, we have a large focus on trying to de-risk these. We have a disciplined approach to capital deployment, and we have a strong focus on aligning all of our stakeholders and therefore delivering very good shareholder returns. These are just a few slides that are included in the handout that'll show you what our portfolio looks like, and some information on the proposed wells in Louisiana. This just quickly shows our planned increase in production, bringing on the 2 wells in Louisiana at the end of this year, which will move us from about 400 odd barrels a day of oil currently to close to 1,000, and then we're planning on getting to 2,000 by the end of 2023. We are a low-cost producer. We run about 15% of our net operating revenue takes corporate overhead, and that'll decrease as our production increases. So there's a bit of a list of some of our peers there that'll sort of show that we're fairly in a fairly strong position. That's it. Thank you very much. If you have other questions, I'm around in booth 7 if you want to talk more about the company or just talk generally about oil and gas. Thank you very much.
Thanks, David. Greg Cochran, come on up and join us, sir. He's the Managing Director of the recently listed uranium lithium explorer developer, Aurora Energy Metals. He's looking forward to telling you about Aurora's unique flagship project, which is located in the Southeast Oregon, not the Southeast Oregon, in Southeast Oregon, which consists of a well-defined uranium resource overlain and surrounded by lithium-bearing lake sediments. Sounds beautiful. Lithium-barium lake bed sediments. He's going to tell us all about that. Please make him very welcome, everyone. The last talk before morning tea. Oh, no, it's not. It's the second last. I got you excited then. There you go.
Morning, everybody. And thanks for that wonderful introduction, Chrissy. It's very, very eloquent. And thanks to Stu and his team for putting on a great conference. It's just so good to be back, to be able to present in person once again, and not by the virtual world. Yes, indeed, we are a recently listed entity. In fact, our first day of trading was 18th of May, so just over 6 weeks of somewhat exciting trading given the situation in global financial markets and the volatility. We have kept our head above water, so that's important to note. As I start, obviously, I will draw your attention, if I can get that to go. Yeah. I had a bit of a problem with this, which worked perfectly this morning. There we go. Draw your attention to the disclaimer. I won't hold you to it in terms of any examinations afterwards, so rest assured. But let's move on to the key themes of the presentation itself. As Chrissy said, a somewhat unique uranium and lithium focus. I don't need to tell you that those are 2 of probably the most critical minerals that are required for the world's energy transition, and even more so relevant in the US in particular. Now, as a result of our IPO, we raised $8 million, and that was to fund an exploration, metallurgical test work, and a study program over the next 2 years. So I stress that is that we are fully funded for that program for the next 2 years. Of course, we also have a really experienced, albeit a small management team that have the right skills, the knowledge, and the experience to deliver on that vision that we have. One thing to note about our ticker being 1AE, we're really easy to find. We're at the top of the industrials list, and I think second overall on the ASX as well. So pretty cool when you introduce a number rather than a letter in front of your ticker. Most notable developments as far as the register is concerned is Paradise breached the 5% level, so they lodged their substantial holder notice last Friday evening. And that's good news to us in terms of their ongoing support for our story. They are well known in the critical mineral space, and in particular in the uranium space as well. I mentioned the small team. We've got a collection of people that have diverse experience, but all relevant to what we're trying to achieve. I'm seen as somewhat of a uranium specialist. Peter Lester, our chair, has extensive lithium and uranium experience. Al has a lot of experience in the USA, and Steve is part of the Mitchell River Group larger project generator, they bring together these projects, gestate them, take them to market, and so he's overseeing in the background the company secretarial and the financials. Chrissy mentioned that we're in Southeast Oregon. It is a lovely part of the world. It certainly has its advantages in terms of when one thinks about the lithium side of the equation. We are within reasonable proximity of Elon Musk Gigafactory 1 in Reno. Reno is pretty much a comfortable arrival spot for us when we're in country. I've just got back recently from a trip over there. It was my inaugural trip to the project, where we've got a number of consultants that we deal with out of Reno, which is quite a well-respected, well-regarded mining hub in Nevada. Whilst we're a well-defined uranium deposit, we speak about this lithium as well, and it's not as if it's just totally blue sky or greenfields exploration. This is something that we know we have because historical uranium exploration has actually intersected the lithium in these overlying lake bed sediments. Those sort of grades that I'll talk about briefly in the lithium, I'll convert them to you when I get into more detail out of the PPM world and into the Li2O world, so you can get more of an understanding in how we benchmark ourselves against the our peers and competitors in the spodumene world. So this McDermott caldera is actually fascinating because if you think about today's Yellowstone National Park, the hotspot, this was Yellowstone about 250 odd million years ago, and there was a series of, I think, 13 events that stretched across the continent over going back as far as some 400 million years ago, that these hotspots occurred across the continent. And as I say, so now the Yellowstone is well to the northeast of us. And what we've had is the benefit of ongoing mineralization and development of that caldera. Caldera being this collapsed volcano that formed water and lake bed sediments on top. There was a fault line that then allowed hydrothermal fluids to come through into the contact between the volcanics and the lake bed sediments, which caused the uranium to precipitate out. Now, our predecessors, well-known company, Placer, nowadays part of Barrick, a very professional company, joint ventured with a junior in the 70s, and they drilled this thing to about 600 holes in a 1,600 meter by 300 meter wide deposit. So really well-defined on the uranium side, but nobody really looked at the lithium at that stage because it actually didn't capture one's imagination. There wasn't much of a market for lithium at the time. Interestingly enough now, in the last 15 or so years, that caldera has become the USA's largest lithium province. So two projects are most notable, the one being Thacker Pass, which is pretty much shovel ready, and that's owned by or held by Lithium Americas, and they would have a market cap well in the north of, I think, $2 billion. Closer to home, Jindalee, the other ASX player that's currently unbundling their assets in WA to focus on their lithium, also in Oregon, about 10 k's to the west of us. So Lindsay Dudfield and his team, I guess, preceded us by about 3 years, and they've been making some good progress in that regard. And you'll see later on from my slides that what we have and what we've discovered to date seems to be very similar to what Lindsay has been proving up. And we have the benefit of a fairly recent scoping study from Lindsay, but of course, Thacker Pass has a lot more extensive information and test work that they've done. One thing to notice about this region, in particular McDermott, it was a historical mining region, and Placer was active from as early as the 20s to the late 60s and 70s, mining actually mercury in that area. So it's surrounded by a lot of really good infrastructure. And it's not just, oh, there's the occasional road and things like that. What you can see there is the little town of McDermott just inside Nevada with the one fuel station, and most notoriously being that close to Nevada is the Say When Casino. But of course, there's also pretty much a substation pretty much right at the project site with a power line running across it, serviced by a great access road, and that's just the local school in McDermott itself. Now, as far as the uranium is concerned, it's in the middle range as far as grade is concerned. Overall, it's about 250 ppm for about 40 million pounds of uranium. However, there is a high grade core of about 18 million pounds running well over 400 ppm. So that puts us in good stead for the potential to have a 1 to 1.5 million pound per annum operation, which may not sound significant in the greater scheme of things globally. However, in the US, that's very relevant, and it is substantial because typically the US had much smaller uranium operations. Frankly, in the 1980s, when the US was producing between 40 and 45 million pounds per annum, they had over 300 uranium mines. So one can just do the math and you can understand how relatively small those operations were. Now, the Mitchell River Group acquired this deposit in 2010 from one of my old companies, Uranium One, although I had nothing to do with the US side of the business. I was running Australia and Asia, Kazakhstan specifically. And they did their own drill test work, 32 PQ holes, and they did some metallurgical test work, as well as some pit optimization exercise and scoping level design studies. And that's more or less what was laid out at the time, thinking purely from a uranium perspective. But of course, when you think about this, you think, okay, first of all, is there more upside in the uranium? And indeed, we believe there is. So the 32 holes that were drilled in 2010 have not been incorporated into the resource. So we're busy doing that now, whilst we're also converting it to measured. And those are some of the results. We'll also be testing, when we drill, be testing the potential for an extension up there in the northwest corner of the deposit. And when you look at it in section, this is when you get to understand how we can confidently say it's uranium and lithium. You can't literally mine one without the other because the lake bed sediments overlie this uranium with the lithium inside. And so our predecessors, that's what they were drilling. Placer on the upthrow side of the fault, and Cordex, another junior, on the downthrown side of the fault. And we know there's uranium down there as well because we've acquired that database. However, when our team went back in 2012 and assayed some of the sample and assayed some of the core on the overlying region, they discovered there's lithium. And those lithium values, if you think about sort of 2000 ppm, is close to about 0.5% Li2O, so lithium oxide. So, that sounds low. However, it's very cost effective, cheap to mine this lithium because it's effectively free dig. That's what the lake bed sediments are. And that's what makes them that much more attractive than the hard rock spodumene mining type of environment. So we've assayed all the remaining holes, and these are some of the results that we got on those assays, and that was released just last week. I think what's really important to contextualize those results, some people were a bit concerned about a number of holes that had no significant intersections. And when you look at this particular section, this explains it. What's happened there is the uranium, there is an erosion channel through the middle of the uranium deposit. And so the sediments build up from next to nothing to about 40 to 60 meters. Pit optimization exercises from uranium perspective, we'd be running at about 1.2, 1.3 to 1. So very low stripping ratio. Then of course that comes with the lithium. But what it does mean is that right down the strike, the spine of the deposit, there's very little sediments, and that's why we haven't got lithium in some of those holes. But of course, in the deeper areas, in the downthrown Grabenbach on the other side of the fault line, on interrogation of those core logs, we know that they intersected hectorite clays, and hectorite clays are the lithium-bearing clays. So that bodes well for our exploration program. In terms of scale, the uranium is a relatively small component aerially compared to the overall project itself. And so that's the upside that we see from a lithium perspective. All of that 3.5 odd to 5 Ks, which actually in some respects is pretty similar to the ground position, the land position that Jindalee has 10 Ks to our west as well. Now, I've introduced also 2 slides just for interest. I'm not going to talk to them. They are there. The presentation is available to download from our website and from the ASX. But it's just to reinforce this theme, both in terms of the lithium And also, just as important, is the uranium. This theme that Harry Fisher spoke about yesterday from the CRU, if you're in on his presentation, about the requirement for regionalization, to develop regional markets where you can secure your own domestic supply. It's a theme that I picked up on London Mines and Money about 3 or 4 years ago, and it's so relevant, even more so now with the Russian invasion of the Ukraine. The uranium supply, enrichment, and conversion situation in the US is dire as a result of that activity. And that's not something that people really know, are aware of, or understand. But that bodes well for companies like ourselves that are on this fast-track mission to deliver and develop a uranium operation, but with us, of course, with this opportunity to also deliver on the lithium side as well. So there's our work program for the next 2 years as far as uranium is concerned. We're busy permitting our first drill program, and we'll be doing the metallurgical test work and studies. Whereas on the lithium side, we've already released the last of the assays from lithium, and then we'll be generating more core metallurgical test work, mineralogy, as we move that forward through the scoping level. So in conclusion there, I've left you with those 4 pointers as the key themes of our investment proposition. Please feel free to come and chat to me. I'm at our booth there in what I think we're calling White Noise Avenue. So thanks very much for your time and your attention. Look forward to discussing it with you. Thank you.
Well done, Greg Cochrane. Thank you so much. Rightio. This is the last one before we go to morning tea. I've got a little request for you too after we finish this one. If I can convince you all to stay for 1 extra minute, I have to film a piece with all of you in the background. And if I could have as many people stay as possible, I'd be much appreciated. But I understand if you need to make your way to the morning tea bar, Jack. I understand that completely. All right. Would you please welcome to the stage AuKing's Mining Chief Executive Officer, Paul Williams. Now, Paul has had a very busy 12 months that he's going to tell us all about after the Explorer roared back to life, relisting on the ASX last June. So they're coming up for their first anniversary. What is the upside of all of this movement for us as potential investors? Paul is going to tell us. Let's make him very welcome.
Thanks, Chrissy. Look, it has been a busy 12 months for AuKing. 12 months ago, we raised $7 million as part of an ASX relisting, set up an operating team from scratch, started drilling and carried out drilling for basically 3 or 4 months in the latter part of last year. Then early this year, we completed the 75% acquisition of the Kunji Park copper zinc project that I'll take you through. And then early April this year, we announced an upgraded resource estimate for the project, a 30% increase. So that gives you an idea of the location of the project, where Kunji Park is in the far northeastern corner of Western Australia, up just near the township of Halls Creek. As I mentioned, we have an agreement with Anglo-Australian Resources, who are now called Astral Resources. They've held the project for a long time. We had the right to earn a 75% interest by spending $3 million over 3 years to acquire that interest. We completed that earn in about 8 months. And as part of, as I mentioned, the exercise we completed earlier this year, largely driven by the drilling that we did last year, was gained a lot more confidence to update the existing resource estimate, which we reported at 8.9 million tonnes of 1% copper, more than 3.5% zinc, and then there's gold, silver and lead in that as well. There's 2 primary deposits that form the basis of that resource estimate, called San Diego and Oneida. San Diego is probably the flagship deposit of the 2. It carries a resource of approximately 4.6 million tonnes at 2.2% copper. Now, I know it's only morning tea time, but if you can hold on for a minute, and if there's one takeaway from a presentation, I'd like you to understand that the Halls Creek region is probably one of the most understated resource provinces in Australia at the moment. There's a lot going on up there. And just very briefly, our project, so Halls Creek, we're just situated outside of Halls Creek. Pantoro operate a gold mine at Nicholson's, just outside of the town. Savannah Nickel, which Panoramic Resources have. I noticed earlier this week, IGO announced they're becoming a substantial shareholder of Panoramic. the Panton Platinum Group project, which is owned by Future Metals. They announced a near doubling of their resource earlier this week, taking them to like the second largest platinum project in Australia. There's several rare earth projects in the Halls Creek region. And this sort of blue shaded area gives you an idea. That's Independence Group. They have a massive tenure holding in the whole area. So they're sort of sitting like a crocodile under the water, looking at this and waiting for opportunities. And as they've demonstrated with the Savannah acquisition, they're ready to move. So the slide there shows you our 500 square kilometre tenure package at Kunji Park. We're just we're just outside the township of Halls Creek, about 10 kilometres out. Two primary deposits, Oneiden and San Diego. They sit on granted mining licences. And that white line there is the Great Northern Highway. That's the Highway 1 up in that part of the country. So the two tenures, 10 kilometres outside of the town and ridiculously close in terms of access to the main road. 500 square kilometres of essentially contiguous tenure. There's this one area over here, which I'll get to a bit later, which is called EMOL. That's an area of separate focus. And so in terms of the drilling last year, we carried out a 6,500 metre drilling program, combined RC and diamond drilling. That gave us the confidence to establish the 30% upgrade in the resource estimate from an original 6.8 million tonnes. One of the things we identified as part of the work last year was quite an extensive presence of cobalt mineralisation at San Diego. And then also we're really starting to get our head around now in terms of developing a mining project that looks like starting as an open pit at Oneiden and then moving into the deeper resources at San Diego. So last year we reported some outstanding drilling results from our program last year, highlighted by those few. There's several others, but 124 metres at over 1% copper, zinc and lead and 50 grams a tonne of silver. And then that AORD hole 4, 105 metres at nearly 2% copper, including a 16 metre zone of over 10% copper. They're outstanding results in anyone's language, and we're very pleased to have reported those. And as I say, that gave us confidence to increase the resource estimate that we currently now hold, and also gave us a really strong platform for the drilling program that's currently underway. The other aspect of this tenure package at Kunji Park, so again, if I take you back to the Halls Creek region, we've got an excellent package within that province. And then within that package itself, there's a series of very high priority targets. We engaged a group in Perth last year, Southern Geoscience Consultants, to put together a compilation of the historic land-based and airborne geophysics. And they came up with a detailed survey of the area. And as part of that work, they've identified 16 hot spots within our 500 square kilometre tenure package, some of which we're already well aware of and we're targeting now. And there's other areas that we need to get to. So now, as I mentioned, we're currently underway with a drilling program. 7,500 metres is the plan combined of RC and diamond drilling. I'll just run you through some of the major targets of that drilling activity as we're going. One of the things we did earlier this year as well, we undertook with a group called New Exco out of Perth that have had quite a bit of success with this downhole EM survey work. With some of the holes that we drilled last year, we had them send the geophysics tools down the hole, get you an opportunity to look out about 100 metres at depth down a particular hole. And what they've done with both San Diego and Oneiden, there's been a couple of very strong conductive sources that they've identified. And this is indicative here. So this is a plan view. So you're sitting over the top of the San Diego deposit. And what they've identified is this strong conductor source here that's pointing out to the northeast. So we're going to be drilling a series of holes into that target as part of the current program. So we're very much looking forward to the results there. Another feature of the drilling last year at San Diego was we sunk a water bore. So that's the existing mineralised zone at San Diego. we put together a water bore, which is just a vertical hole, about 130 metres of depth, and that's about 700 metres away from the existing mineralised zone. And we decided we'd run the samples out of the water bore through the lab. And there were two really discrete zones, one at about 50 metres, another at about 85 metres that came back with quite high grade copper. So we thought, okay, there might be something going on here. And you will see that from, I beg your pardon, so from that, in that target zone, there are some historic holes, but they're only very shallow, 20, 30 metre deep holes. So as part of the current program, we're going to be doing some RC drilling, 120 or so metres per hole in and around that target zone, just to see if there's a bit more to the initial smoke that was identified with that water bore hole last year. As I mentioned, with the drilling last year, we identified quite a significant amount of cobalt. It wasn't completely new, but with a lot of the historic drilling before 2010, they didn't assay for cobalt at all. And that's not meant as a criticism of the previous owners. It's more just a reflection that at that time, it really wasn't a focus of anybody. So we went back, analysed some of the old drill results, and we also went back and found some of the old drill core samples that were still sitting around at the core storage facility. There were 8 holes that we found. We sent them off to the lab to get assayed, and every one of those 8 holes identified from anomalous to quite significant cobalt readings in those old holes. So what we're now seeing, I know that's a very messy sort of diagram over there, but that's a long section looking into the San Diego deposit as we currently understand it. But you can see distributed all the way around that deposit is indications of cobalt. So you can understand that's with all the focus on critical minerals and so forth with cobalt. You can understand that's going to be quite a significant focus of ours going forward. Then, as I mentioned, with this downhole EM work, we at Oneiden, the other significant conductor that New Exco identified for us was this area to the southwest. So it's a cross-section look at the existing modelled Oneiden deposit. So there's another area here to the southwest that is going to be the subject, and we've actually started drilling in that area now. So that's a focus of, and look, and I suppose one of the things, last year the primary focus was to drill in and amongst the 2 existing deposits, get more confidence, build up the resource estimate. Now the current drilling program is all about extending the existing deposits and potentially finding additional mineralisation to be able to expand our existing resource base. But this is one area that is of particular interest to us because it's somewhere around 150 metres, 150 to 200 metres deep, and will be the subject of the current drilling program as well. Another feature at Oneiden South, we made a fairly important appointment at the start of the year. We engaged Chris Bitar as our exploration manager. Chris joined us. He was a senior geologist at Pantoro for several years, overseeing their drilling program at Norseman. Chris joined us, and one of the first things he identified for us was these few, if you look at that, so that's the Oneiden deposit, the existing area that we've been focusing on. And then he said, look, there's these few little interesting anomalous magnetic anomalies that are worth targeting. And so we've been drilling in and around these 2 mineralised zones. We haven't got that one yet because we need some heritage approval, but these ones, they've been drilled. The material are in with the labs getting assayed. We're very hopeful. We've seen some existing mineralisation. We don't know how much until we get the assays back, but we're very, very, very interested, as you can appreciate, because that's about a kilometre distant from the existing Oneiden deposit. So with these style of VMS deposits, you're potentially looking at mineralised shoots occurring in different zones in and around the existing mineralised areas that we've already identified. So this could be something that we'll have a bit of fun with going forward. As I mentioned earlier on, there's to the west of our tenure package, there's a standalone exploration licence. It's called EMAL. This is an area that Northern Star had for several years, from about 2005 to 2009. All those white dots there, they're drill holes that Northern Star put in before they moved on to bigger and better things at Paulson's. So we picked up the baton, so to speak, from Northern Star, where it took us a while to get some heritage approval to do drilling there. But yeah, so we're actually drilling right there at the moment, and some of the initial indications are very positive. So we'll be reporting the result of that as soon as we can. Another feature of the overall work program is a metallurgical test work program at Oneiden. The previous owners had quite a bit of difficulty trying to find a metallurgical solution for the at Oneiden, the near surface oxide and transition materials. Okay. At Oneiden, so we've teamed up with a group out of Perth called QEM Metals. They've got the Australian rights to an ammonia-based leaching technology. We're reporting work as it comes to hand. It's registered with the Commonwealth Government R&D incentive program, and we're looking forward to the opportunity to establish a pathway to process that material. Look, and then just to summarise, why AuKing? A couple of things. As I mentioned, the Halls Creek location, please, that's one takeaway for today. We've got a highly prospective drilling program that's currently underway. We'll be reporting assay results from around about the middle of July. Our current market capitalisation is about $8 million. We've got $4 million in the bank, so that's an enterprise value of $4 million, and we've got nearly 9 million tonnes of resource. So I'll leave that with you to do the math. And then I don't think anybody would complain that a company that's looking to develop copper, zinc, cobalt, silver, gold is in the right space. So that's the opportunity for us. The contact details are there. The presentation was announced to the ASX this morning. I'll be up at the booth. So by all means, either contact me directly. That's my phone number and email address. And enjoy morning tea. Thank you for your attention.
I like it. Giving out your phone number directly to everyone. That's fantastic. Can I bother you all, please, just to have 1 minute of your time? Jed, down the back there, can you grab the camera? Jed, come, run quick, because they've